Let's continue the discussion. So now let's start the concept of what is an assurance engagement, what are the elements of an assurance engagement. And we understood at the beginning itself that audit is a type of assurance, correct? What assurance? Reasonable assurance. Audit provides reasonable assurance. So basically, what service that we are rendering is an assurance service, correct? We are providing an assurance service to various users of financial information. Now, what is an assurance engagement? Assurance engagement is one where there are three parties involved. One, management, correct? Where they prepare financial statements, and there are users who use these financial statements and take decisions, economic decisions. They take some economic decisions, and there is an auditor who verifies these financial statements and gives a report to the user so that they can take a confident economic decision based upon the financial statements, correct? So three-party relationship. Assurance engagement is a three-party relationship. One, management. It is called as responsible party. It is called as what? Responsible party. Responsible party means what? They are the one responsible for the subject matter. Subject matter means what? Here, financial statements. Here the subject matter is financial statements. So management is responsible for preparing subject matter which is known as financial statements based on applicable criteria. Based on applicable criteria. What is applicable criteria? Financial reporting framework, correct? Management is responsible for preparing and presenting financial statements based upon applicable financial reporting framework, and auditor has to verify whether the management prepared financial statements as per applicable financial reporting framework and give report opinion on that. And this report is used by third parties, shareholders, various other users, and they take some economic decision. So auditor is, through an assurance engagement, we are increasing confidence of the users of the financial information so they can take a better decision. Agreed? So assurance engagement means an engagement in which a practitioner expresses a conclusion. You see here they are using the word conclusion. Conclusion may be a reasonable assurance or it may be absolute is different anyhow. That's a different level which we don't give at all. There is another type of assurance, limited assurance. There is another type of assurance, limited assurance. There are two levels of assurance that we provide. One is reasonable assurance. That's a reasonable assurance engagement. Another level is limited assurance. Reasonable assurance is a high level of assurance, but not absolute assurance but not complete assurance. Limited assurance, like what is exactly the difference between reasonable assurance and a limited assurance? Take this example of movie. If the movie is really good, you say that it is good. If the movie is one time watch, you say that it is not bad. Yes or no? Both are not same. Good and not bad, both are not same. Agreed? When I say good, it gives reasonable assurance on the other guy. Yes or no? Where the other person will get interest to watch the movie if I say it is good. If I say it is not bad, it's a okay kind. Exactly. Yes or no? Limited assurance is like not bad. Reasonable assurance means saying whether it is good or bad correctly. You are exactly, you have to exactly tell, is it good or bad? Exactly, you should tell any one of it. Whereas limited assurance is, it is like not bad. You understood the level of satisfaction or level of confidence when somebody says it is good, when somebody says it is not bad, the level of confidence will be different. Yes or no? Limited assurance is such that. But both are assurance engagements only. Both are assurance. Like, for example, first of all, like what are all works that we can do once you become a CA, once you establish a practice? Like first of all, you became a CA. What are the options that are available for you? There are three options. One, you can take care of your family business or profession, or you might have started some new business altogether not related to your profession. That might be something. Or related to CA profession, practice. Yes or no? Practice means CE, not SE. Yes or no? Practice, CE, noun. It's a noun. SE is a verb. Getting it? So practice. Practice indicates license. It also indicates license. Or you can go for employment. Employment in some industry. Now when you're taking a practice, what kind of works that you generally provide? Do you provide only audit services? No, you may be providing accounting services, you may be providing audit services, you may be providing consulting, you may be providing IT filing, so many. Whatever works that we provide, they were broadly classified into two categories. Whatever works that we provide, they are broadly classified into two categories. Either we provide assurance based, yes or no? Assurance based services or other services. What is it? Other services. It is called as non-assurance based, correct? Non-assurance services. A chartered accountant who is running a practice can provide services that either fall under assurance or non-assurance. Suppose a client approach, he just wants us to file IT return. Is it an assurance service or non-assurance? Non-assurance service. Suppose a client approached us, he wants us to do tax audit. What service it is? Assurance engagement. Getting it? Now again, assurance engagement, we can call it as assurance engagement or assurance service, anything. Non-assurance engagement or non-assurance service, anyway you can call. So let us substitute this word assurance engagement. Can I? Yes or no? Can I call this as assurance engagement? And it is non-assurance engagement, correct? So non-assurance engagement. Now again, assurance can be on two different things. Assurance is on, generally we give assurance on historical financial information, correct? Generally we give assurance on what? Generally we give assurance on historical financial information. For that only many people call us. We are appointed as an auditor under Companies Act for a company to do financial statements audit. What financial statements are they? Historical. So we have to conduct audit of historical financial statements and give an opinion on that. Nothing but it's an assurance on historical financial information. Correct? Or we may be sometimes called upon to give assurance on other than historical financial information. Sometimes we may be called upon by somebody else to provide assurance on other than historical financial. Other than historical financial means what? Other than historical financial means what? It's not past, which means it is related to future. It's called prospective. What is it called as? Prospective financial information. So other than historical financial information sometimes will be called upon where we have to give assurance on prospective financial information, or sometimes we may have to give assurance on something that is not a financial information at all. We may be called upon by somebody to give assurance on something that is not at all financial. For example, control set service organization. What is it? Control set service organization. What is control set service organization? We will discuss it. You will have discussion on in CA final. There is a standard called 402. There is another standard called 3402. We call them as SOC audits. We call them as what? SOC audits. This is called as SOC audit. Systems and Organization Controls Audit. Systems and Organizations Controls Audit. SOC audits we call. SOC type 1, SOC type 2, like that. There are so many varieties of SOC audits that are there. So sometimes we will be called to give assurance on controls. We are called for providing assurance on controls. Nothing but whether the controls are operating effectively or not. You are just called to check controls. That's it. Suppose Metro Rail Limited is there. Chennai Metro Rail Limited, Delhi Metro Rail Limited, Metro Rails are there. Within the Metro Rails, whether controls are implemented properly or not, sometimes they may call you. Like what you have to do, I have to visit a metro and I need to observe how passengers are entering into the platform. Like, are they entering onto the platform without any ticket, or is there a ticketing procedure? So we will have to check that. So we saw ticketing procedure is there. Some ticketing procedure is there where they will be given some coin or some card, smart card will be there where they need to, scan that smart card or drop the coin into the counter. Then the gates will open. That's called barricades. Barricades will open. And passenger is, the moment passenger crosses, the sensor reads whether a passenger, single person crossed or multiple persons crossed. If at all sensor detects that there is a multiple person movements, it will throw an alarm, like alarm will sound. 99% the gate will close the moment one person crosses immediately, swiftly, without damaging the people. Yes or no? Suppose what if when I'm observing, coin was dropped, two people jumped suddenly. That's a control weakness. Correct? That's a control weakness. Fine. So I found one weakness, I will note it down. Fine. So I observe this weakness. So one of the weakness I identified is barricade is not closing promptly, immediately after one person crossed that particular barricade. Then they went, a customer, I myself took one ticket. For example, I am the auditor. I am doing controls audit now here. I am doing audit. I have been given a ticket where on the ticket the timing was mentioned. This ticket is valid for 2 hours or the ticket is valid for 1 hour, 1.5 hours, like that it is given. And the ticket was taken by me from point A to point number D, like station number A to station number D. Actually the train route is station number A to station number L. It has so many stations it is going to touch, but the journey, the ticket for which I have taken is from A to D, where the ticket price is very lesser. If I have to take the ticket up to L station, the price is very higher. So, but you know what, I have a friend who is at station number G. Getting it? I want to give him a parcel, but I don't have that much money to travel. What I do is, the ticket is valid for 1.5 hours or 2 hours. Getting it? Ticket is valid. To go to station number G, it takes 40 minutes. Again, to return to the station number A, it takes again 40 minutes. Or maybe D. I took ticket up to station number D, right? It will take some 30 minutes. 40 plus 30, it is just 70 minutes. I have 120 minutes time. Okay, 10 minutes train waiting time, all put together I calculated. Okay, I'll do one thing. I'll take ticket from A to D. But I'll sit in that same train up to station number G. And there my friend is waiting where I give him the parcel. From G, he'll go somewhere else. And again, I'll change the platform. Again, get back into another train and come back to station number D and then get down, drop the coin and come out. Is this a weakness? This is possible. This is possible because changing platform, you don't have any checking. Are you getting it? In the metro? This is a loophole. Now, this cannot be restricted. See, ultimately the object of selling ticket A to D is what you should get on only in the D or earlier. You cannot get on at later station. That is the main objective. You may be enjoying the ride up to station number Z and coming back. That's okay. We don't have any problem. Are you getting the point? So here objective is what? Here control objective is what? When we give a ticket from station number A to station number D, the control objective is the passenger can get down either in the D or earlier stations, but not later stations. He cannot exit out of the metro station later. D or earlier station, he can happily exit. Yes, sir. That's what the ticket, right? Yes, sir. If I take up to D station, can I get down in C? Obviously, but I can't get down in E. That is the rule. So ultimately, he get down at D only. Control objective is he must get down only at D. That is the reason why destination ticket is. This kind of audit, we are going and checking whether the controls are working properly or not. We are going and checking. This is called control audit. Are you getting it? Suppose now I went to station number E, elephant E, alphabet E, and I want to get down there, and when I'm inserting the coin, it is not allowing. Inappropriate station, some error it is throwing. Pay fine, pay penalty, somebody immediately coming and leaving fine, all that, which means controls are effective. This audit is called as what? Controls audit. I'm just telling you an example of controls audit. Whereas here, there is another concept called controls at service organization. What is service organization? I will discuss later. We have a reference of the same in 501 standard. At one place reference is there I will tell you. Getting it? So, controls at service. So, we may be sometimes called upon for providing assurance on operating effectiveness of controls. Getting it? At service organization. So this is another kind of assurance that we provide. And so this is what, other than historical financial information. So we may be providing assurance on historical financial other than historical financial information. Now coming to on historical financial, on past financial information. we may be called upon to give two types of assurance. We may be called upon to give any of the two types or both of these assurances. One is reasonable assurance. One is reasonable assurance. Other one is limited assurance. Other one is limited assurance. So we are called upon to give assurance on historical financial information, where we may have to give reasonable assurance or we may have to give limited assurance. Suppose if at all you are giving limited assurance, that is not treated as audit. If you are giving reasonable assurance, that is called audit. Audit is a reasonable assurance engagement. But you are not giving reasonable, but you are giving what? Limited assurance. When you are giving limited assurance, what type of engagement it is called as? Review. What is it called as? Review. In an audit, we provide opinion. In a review, we simply give conclusion. In a review, whatever we are expressing, no, it is called as not opinion. It is called as conclusion. Understood? So, whereas in audit, whatever we are expressing ultimately, it is called as what? Opinion. In a review, whatever we are expressing ultimately is called as what? Conclusion. Review is the word which is used for which assurance engagement? Limited assurance engagement. Audit is used for reasonable assurance. But whether it is review, whether it is audit, both are dealing with historical financial information. Now, for review, we have standards SRE. We have a standard called SRE, Standards on Review Engagements. Standards on review engagement. So whenever you are accepting the review engagement, whenever you are appointed for a review engagement, you must conduct review in accordance with review standards. Understood? Suppose you are appointed to conduct audit. You are appointed for conducting audit. For that, what standards are applicable? SAs, Standards on Auditing. Are you getting it? So if you are appointed for conducting audit, you must conduct audit in accordance with standards on auditing. Sir, I was appointed for other than historical, not historical. Forget about reasonable assurance, forget about limited assurance. I was appointed for conducting assurance. I was appointed to provide assurance on other than historical financial information, or I was appointed for providing assurance on control set service organization. Which standard is applicable? There is a separate standard called SAE. What is it? SAE, Standards on Assurance Engagement. What is it? Standards on Assurance Engagement. It is simply called as assurance. That's it. It is not audit. It is not review. It is simply called as what? Assurance. But remember, audit is also an assurance engagement, correct? Review is also an assurance engagement, correct? Other than historical financial information, that is also an assurance engagement. Are you getting it? All are assurance only. But for audit, there is a separate standards which are issued called standards on auditing. For review, there is a separate standards issued which are called as standards on review. For remaining assurances, they directly issued assurance standards itself. They didn't name specifically another name. They didn't put any other name specifically. They straight away treat it as what? Standards on assurance engagement. Correct? Now, we are there not only for assurance. We also provide some other services, correct? Like filing IT return. Is there any assurance involved in this? No. Client will give the data. I just have to prepare the data as per the IT return format and file it. Client is giving me GST data. I am compiling GST return and filing the return. GSTR1, GSTR3B, GSTR2A, 2B, all that, yes or no. So I take the data from client and I file it. I take ROC data from client and I file it, where I will charge from the client filing fees. Are you getting it? IT return filing fees, GST return filing fees. I will just collect some fees for filing services. Now, what are these services? These services are called as non-assurance engagement. These services are called as related services. What are they called as? Related services. And for them, we have standard called SRS, Standards on Related Services. SRS, not SRE. SRE means what? Standards on Review Engagement. SRS means what? Standards on related services. SAE means what? Standards on assurance engagement. Simply SA. Standards on auditing. That's it. Are you clear? So whatever the work that you are doing as a chartered accountant, it either comes under non-assurance engagement or comes under assurance engagement. That's it. Understood? You know, there is something called stock audit. Banks will appoint. Banks will call us. Dear Mr. So-and-so, please go and do stock audit and come back. Please give us a report on this stock audit. This also comes under related services. This also comes under related service. Now immediately you might get, sir, stock audit, audit word is there na? How come it is related service? Audit means assurance, no? Here audit is in the context of financial statements. Here review is also in the context of financial statements. Stock audit, are we talking about the value of inventory or are we talking about the quantity of inventory? Stock audit deals with quantity. When it is not financial information, why this is applicable? Are you getting it? If it is historical financial information, then audit and review will come. Stock audit is not dealing with the financial information. Stock audit, simple. Bank will send us, dear Mr. go to so and so borrower. We have a borrower. Okay, we gave 10 crore worth of loan to him based upon his stock inventory. You go and come back, you go and check whether that much inventory is there in the godown or not. Just to go do physical count, come back and give us a report. That's enough. This is called as agreed upon procedure. What is it called as? Agreed upon procedure. So related services, you know, related services are two types. Agreed upon procedures, like where a client agree with you to carry out some procedure. That procedure is neither an audit, nor a review, nor an assurance. They will agree with you some procedure. You please go and do that procedure and come back. Just to do that procedure and come back. You need not provide any assurance at all. You need not provide assurance. You just go, take inventory count and come back and tell how much you found. That's it. You need not tell whether inventory is maintained properly or not, inventory controls are proper or not. You need not give any assurance on the client inventory management. No need. You just go there, count and come back and report me the result. That's it. So this is a non-assurance engagement. Stock audit is a non-assurance engagement. Agreed. It is more clearly called as what? Agreed upon procedure. Not only this, sometimes I told you, remember private companies? Private companies are typically speaking nothing but one person only doing that. Remaining shareholders, for namesake, it will be there. First of all, they don't even know that they are having a company. They think they are running restaurant. But legally, their form of restaurant is what? Company. So for them, tell me, do they know about all the Companies Act provisions, preparation and presentation of financial statements, Schedule 3, all that? Do they aware of it? But tell me, as per normal responsibilities of management, whose responsibility to prepare financial statements? Management. Director means that restaurant owner only, right? Yes or no? He is responsible for preparing financial statements, but he don't know how to prepare financials. Can auditor prepare financials? Hey, auditor is for audit. Auditor cannot prepare financials. Now this fellow has to prepare financials. How he will prepare? That too as per Schedule 3, that too as per Ind AS, that too as per so and so regulations, accounting standards, Ind AS and all over there. How he will prepare? Again he will approach another CA. Suppose he asked me, let us assume I am the auditor, he asked me, I will tell him, sir, I am not supposed to prepare financials because I am doing audit. Yours is a very big company, turnover is so high. So I will not take risk of preparing the financials and I will only have to do audit. No, I will not take that risk. Moreover, company success, it is prohibited. I will do one thing. I have a friend who is also a CA. You go and meet him. He will help you to prepare financial statements. He will help you to prepare financial statements. He will help you to compile financial information, financial statements. That's called compilation engagement. What is it called as? Compilation engagement. That's called as compilation. So client is approaching here another CA for what reason? For auditor. I mean, is he approaching client? Is he approaching another CA for getting assurance? No. You, dear CA, just prepare me. These are my books of accounts. This is my trial balance. Take it. Schedule 3, Ind AS, that and all, I don't know. You check what is applicable to me and prepare balance sheet P&L as per that format. I will give you entire data. You please help me. You assist me in preparing financial statements. I just take his help. He is helping me to prepare financial statements as per applicable financial reporting framework, so that the financial statements I will give it to my auditor, so he will audit and give me an opinion. Now this other CA where he is helping me, no, that service is called as what? Related service. More specifically, that work is called as what? Compilation engagement. So when we are providing any compilation engagement, or when we are providing any agreed upon procedure service, all these two are called as what? Related services. For this, what standards are applicable? Standards on related services are applicable. Now these standards on related services are 4000 series. The standard agreed upon procedure 4010. Compilation is 4410. Are you getting it? Now, other than historical financial information, nothing but prospective or controls. For that, we have 3000 series standards. By the way, those standards are called as what? Standards on assurance engagement. These standards are called as standards on related service. 4000 series dealing with SRS. 3000 dealing with SAE. Then limited assurance review, I told, right? This is dealt under 2000 series. This is dealt under, whereas audit 200 series to 800 series. In audit 200 to 800. By the way, again, auditing standards are again totally how many we have? 38 auditing standards we have. 38 we have. 3 standards are dealing with special purpose frameworks. Specifically dealing with special purpose framework. 35 standards are mainly dealing with general purpose framework. See, I am not saying only dealing with general purpose. Mainly dealing with general purpose, which means these 35 standards can also be applied wherever practicability is there, wherever possibility is there, for special purpose financial statements audit also. Are you getting it? Now, special purpose financial statements, specifically the series is what? 800. Whereas mainly general purpose financial statements 200 to 700. Only this 35 standards is what we are having in our syllabus. In CA Inter, we don't have these 3 special purpose financials related syllabus. We don't have 2000 related syllabus. We don't have 3000 series, 4000 series in the syllabus. We have them in final. You know how many we have? Review, we have 3 standards. No, not 2, not 3, only 2. Assurance we have 3. Related services we have 3. And here special purpose framework, how many? 3. Totally 10 standards. Totally, just a minute, this is 2. Yeah, 2 standards. 4000 series, 2 standards we have. Totally 10 standards we have only at CA final. We have only at CA final, which means in CA Inter, what standards that are there in our syllabus? Only standards on auditing that are mainly dealing with general purpose financial statements. Only that is there in our CA Inter syllabus. Now, tell me whether you are providing audit engagement or review engagement, assurance engagement, related service engagement, whatever it is, you must provide them as per respective standard. You must provide them qualitatively. Correct? You must adhere to laws and regulations when you are providing any of this service. Correct? To ensure quality control. To ensure quality control. By the way, these services are provided by who? Firms. Firms means what? CA firms, which may be sole proprietary firm or a partnership firm. Are you getting it? Like again, CS, no, they can practice related. How they can practice? They can practice individually, or they can practice with group of individuals. Provided all of them are CS. Now, if it is individual, you are called as a sole proprietor. Correct? You are called as a sole proprietor. But if group of individuals are doing, they must register either as a partnership firm or as an LLP. Only 2 modes are permitted as per CA Act. Multiple CS group cannot form a company for running practice. You cannot do practice in the name of a company. Corporate form of a practice is not allowed. If you want to practice as a chartered accountant, either you can practice individually or with others as a partnership firm or as an LLP. Only these 2 are permitted. Now, sole proprietor, they said, right? Sole proprietor means, suppose I qualified CA final and I applied for membership of the institute. I also applied for COP. Remember, membership is different, COP is different. One more fact I'll tell you. If you qualify CA final, you are a CA, but not chartered accountant. Yeah, chartered accountant is a designation. Chartered accountant is a designation. If you are permitted to use the word chartered accountant at your residential premises, no problem. But in public places, you cannot use the word chartered accountant, because chartered accountant means designation. CA means qualification. You can absolutely use the qualification you have. Caramharsha CA, absolutely no problem. But Caramharsha chartered accountant, you can use it only when you're having certificate of practice. Only when you're having certificate of practice. Tell me, very simple. If I keep a name board outside a building, Caramharsha, CA, people just think it's a name board, he's a CA, leave it. But if I say name board, name and below chartered accountant, they think some office is there inside. That's how the perception. Just think of it. Are you getting the point? Suppose if a doctor, suppose let us assume myself a doctor, Caramharsha MBBS, FRCS, all that I don't know. Okay, so some MBBS I just kept Caramharsha. They think it's a normal name. But if I say Caramharsha orthopedician below, they think doctor is there, working there. Orthopedician, cardiologist, psychologist, psychiatrist, as a physiologist, all these are what? Nothing but designations. They are all designations. Getting it? Designation you should not use. Designation if you are using means you are deemed to be in practice. You are deemed to be in practice. Able to understand. So this anyhow we will learn about this. You will be getting an idea about this in CA final. We have ethics, I told, right? There we will tell whether to use CA designation or qualification, how to use all this. So that and all we have guidelines on that. So we will be discussing it in CA final. Clear? All of you? Fine. So now again, sole proprietor, right? So once I qualify, I apply for membership number. Now 6-digit membership number is what? My membership number is 239714. My membership number is 239714. Right now 2,80,000 series is going on. 2,80,000 series is going on. So after I took another 40,000 CS, took up membership. Getting it after I qualified. I did in 2015. I qualified in 2015, 9 years. I'm about to complete 10th year in another 6 months. Yeah, a decade I'm completing. It's okay. Fine. But I don't look like such, no? Yeah, I look like a student, no? Yeah, it's okay. Fine. So I'm joking here. So 239714, that's my membership number. Now remember, just because you are having membership number, that doesn't mean you are having license to practice. If you want to practice, in the sense, if you want to tell public that you are a chartered accountant and take up works as a CA, you require certificate of practice. Certificate of practice means it's a license from the ICA. Certificate of membership is different. Certificate of practice is different. So you should get COP. Now if you're having COP also, COP number also say membership number only COP number. Just that institute data will have, like you have student card now in SSP portal, we will have member card. Once you qualify, you become a member, you will have a member card. Inside that card, it will be mentioned COP status, yes. COP status, if the yes means you are having COP. So that means you are eligible to practice. You can take up practice, accountancy works, audit related works, all that. Now when you're practicing as individual, no, you can even take FRN. There is something called FRN, firm registration number. What is it? Firm registration number. Suppose if I am practicing individually, I will sign on my name. I will sign on my name, CA membership number. I will sign on my name. But I will do one thing. I will take a firm. I will create a firm name for me. Firm means what? Don't think firm means partnership firm. Firm means an enterprise. Firm means an establishment. Firm means a concern. Firm is not partnership firm. But see, partnership is also a firm. LLP is also a firm. Company is also a firm. Sole proprietary firm. Firm means what? Organization. Dictionary meaning of the word firm means what? Organization. Sole proprietary firm, we will tell, no. Sole proprietary firm means what? Sole proprietary partnership, huh? No. Firm means organization. That's what. Now as an individual, I can directly practice in my name, or I can take up a firm name. Caramharsha and Co. Chartered Accountants. There is a firm called GP Kapadia and Co. Chartered Accountants. GP Kappad is the founder of ICA. Or he is the first chartered accountant probably. Getting it? So GP Kapadia and Co. Chartered Accountants. Getting it? So it's actually a firm name where the proprietor name is what? GP Kapadia. He is no more, but still the firm is existing because he didn't practice in his name. He practiced in the firm name. Once I open a firm, tomorrow I can take some additional partner. In that case, my firm will become partnership firm. Are you getting it? If firm name is separately there, you will have goodwill. You can sell that firm name to some other CA and get goodwill amount also. If at all you are practicing in your own name, no matter how much ever goodwill you can't sell yourself, right? Correct? Huh? Exactly. Getting it? Now, suppose if it's a partnership firm, obviously FRN is required. Obviously, firm registration number is required. Understood all this entire structure? Now. So, audit, review, assurance, related services. Oh, by the way, review means what? Review means what? Where review will be conducted? Limited assurance, fine. But where it will be conducted? Listed companies. I think you remember this 129A section in Companies Act. Exactly. What are the periodical results? Filing of periodical results for unlisted companies. For listed companies, as per SEBI regulation, they have to file with the SEBI quarterly results. The stock market is very dynamic. I cannot wait up to 1 year to know what is happening in the business. I am investing. I'm a trader. I'm an investor. I'm a rigorous investor. I cannot wait up to 1 year and suddenly see big loss and I suffer loss. Yes or no? I cannot. So give me financial insights about the company once in 3 months. So that is what quarterly results concept is. Quarterly results concept is. So a listed company has to periodically submit. What is the periodicity? Quarter. Once in a quarter has to submit to the SEBI what exactly the profit or performance or position of the company for that particular quarter compared to the last financial year, last year same quarter. Are you getting it? They do file quarterly results like this. So every listed company has to do. Now quarter results they're publishing now. In stock market they're publishing. They should be verified, no? Now again, audit recently started. How come auditor can conduct 3 months audit? Dear Mr. Auditor, don't do in-depth audit. It's okay. I know anyhow you are going to do an in-depth audit by 31st March year end, you will do all that. At least provide me limited assurance on this. Rather than zero assurance, give me limited assurance. You go and see. Based upon your understanding of the entity, based upon books of accounts data that you have seen, is there anything that you think the results filed by the company is wrong? Just to go and check. See, to identify whether everything is right is difficult task. But to identify is there anything wrong is easiest task. Finding flaws is easy than finding whether everything is right or not. Able to understand? All of you? So in audit, what we are asking, go and check each and every item of the balance sheet, each and every item of the P&L, see whether it is right or wrong, Whereas in review, what we ask them, you go and see, is there anything wrong? Just check, is there anything wrong? And come back and tell. If you find nothing, come and say that you didn't find anything wrong. Are you getting it? So that's why in a review, how we give opinion, it's not in fact opinion, it's called as conclusion. In a review, how we give, nothing has come to our attention. Nothing has come to our attention that causes us to believe that financial statements are not true and fair. Financials are not true and fair. Are they not true and fair? I don't know anything. I didn't get anything to my attention to say that they are not true and fair. I am not saying they're right. I am saying to say they are wrong, I didn't get any information to say that they are wrong. Are you getting the point? I did not get any information contrarily to say that the balance sheet and P&L are wrong. So is this a negative assurance or not? Negative style of assurance. I'm not straight away saying financial statements are right. I'm not saying like that. I am saying to say that they are wrong, I don't have any evidence. I don't have any evidence to say that they are wrong. I am not saying I have evidence that they are right. Both are different. Yes or no? In audit, you must give clearly that based on the evidence I have, the financial statements are true and fair. Means there you must have evidence that they are true and fair. Whereas in review, if you have no evidence that they are wrong, that's enough. You just say that. Are you getting the point? Don't worry, more in-depth discussion in CA final it is there. But we have in this right now 10th question onwards, that only we are going to discuss. Are you clear? Until now, are you clear? Yes. Now let's look at the actual discussion. So what is an assurance engagement? Assurance engagement is an engagement in which a practitioner expresses a conclusion ultimately designed to enhance the degree of confidence of the users other than the responsible party. Obviously, responsible party, they are the one who prepared financials. Will their confidence increase because of audit? They only prepared balance sheet P&L. They will have 100% confidence that it is completely right. For whose confidence I need to increase? Users' confidence. About what? About outcome of the evaluation or measurement of a subject matter against criteria. Outcome of a evaluation. Outcome of the evaluation or measurement of a subject matter against criteria. Nothing but subject matter. In case of audit, what is subject matter? Financial statements. In case of audit, subject matter is financial statements. In case of review also, financial statements. In case of assurance engagement, what could be the subject matter? Prospective financial information. Correct? In case of assurance engagement, what is the subject matter? Prospective financials. Subject matter is nothing but what are you verifying? In case of audit, I am verifying historical financial statements. In case of review, I am verifying historical financial statements. In case of assurance engagement, I am verifying either controls or I am verifying prospective financial. That is a subject matter. How will I verify? Against some criteria. In case of normal, suppose a listed company is there. They are verifying. They have some financial listed companies there. They have some financial statements. They prepared some financial statements, general purpose financial statements. What I should verify there? Whether these financial statements are in accordance with Ind AS. Whether these financial statements are prepared in accordance with Schedule 3. Whether these financial statements are prepared in accordance with ultimately applicable financial reporting framework. Applicable financial reporting framework is the criteria against which subject matter will be verified. Once you verify the subject matter against the criteria, give an assurance, give your conclusion, give your opinion. What opinion you will give? Yes, the financial statements are prepared in accordance with the subject matter. Financial statements are prepared in accordance with the applicable financial reporting framework. That's a positive opinion. If you felt they are not prepared, then you say that they are not prepared in accordance with the applicable financial reporting framework. Are you clear? Easy or not? So now once again you see, assurance engagement means an engagement where practitioner expresses some conclusion. In case of audit, it is called as opinion. In case of review, it is simply called as conclusion. No further wording. Getting it? Where a practitioner expresses a conclusion to enhance the degree of confidence of the users about outcome of the evaluation or measurement of a subject matter against the criteria. I evaluate. No, what I evaluate? Financial statements I evaluate. Against what? Applicable financial reporting framework. Once I evaluate, once I verify whether financials are prepared as per the applicable framework, I will get some outcome, right? Yes, it is matching. No, it is not matching. Some outcome I will get right, or some outcome. This outcome is what I'm expressing. No, this outcome is what I'm expressing in the form of a conclusion, in the form of an opinion. Correct? Agreed or not? All of you? It means, so in an assurance engagement, it means practitioner gives an opinion about specific information due to which users of the information are able to make confident decisions, knowing well the chances of information being incorrect is diminished. Why chances of information being incorrect is reduced? Because auditor verified. Auditor already verified and said it is true and fair. So the chances that it is going wrong will be very low. The chances that the information might be wrong is low. See, they are not saying chances that information might be wrong is zero. They're not saying chance is zero. The chances they're saying is diminished, means reduced. Since already financials are prepared, we are having a doubt whether they're right or wrong. some information might be wrong. Auditor verified in depth and then gave an opinion that everything is right. Now, after he gave the opinion, what would be the chances of going that financial information? I mean, what is the chances that information might go wrong? Low. That's it. Understood? All of you? So once again, assurance engagement means an engagement where practitioner expresses a conclusion or opinion. You can also add the word opinion, designed to enhance degree of confidence on the users. So you are giving opinion where it increases confidence of the users on what? About outcome of evaluation or measurement of a subject matter against criteria. Evaluation or measurement means what? From audit angle, verification. About verification of subject matter against criteria. In financial statements audit, subject matter is what? Financial statements. Criteria is what? Applicable financial reporting framework, which may be Schedule 3, accounting standard, Ind AS, all that. Understood? Therefore, in an assurance engagement, practitioner gives an opinion about specific information, due to which users of information are able to make confident decisions, knowingly that chances of information going wrong is reduced. Understood? All of you, you see how I am reading? Observe the reading style. Everywhere I am giving appropriate pauses and processing it when I am reading, then going to the next. Yes or no? You should read carefully. The better you read, the better you remember. That's it. Next. So we understood assurance engagement means what? So from the definition, assurance engagement involves three parties. Who are they? Like first of all, there is a three-party relationship. Who are they? Getting it? Some responsible party, practitioner is there, and degree of confidence of the users. Three people were there in an assurance engagement. Further, there is something called subject matter. There is something called criteria. Totally 5 elements. 3 elements are related to the parties involved. 2 elements are related to the subject matter and criteria. So what are the elements of an assurance engagement? They will give you this itself straight away 4 marks question. What are the elements of an assurance engagement? You have to write these 3 points mainly, where you will get 4 marks. Getting it? 3-party relationship will have 2 marks weightage. Subject matter will have 1 mark weightage. Suitable criteria will have 1 mark weightage. Understood? So what are the elements of an assurance engagement? Elements are the below. One is 3-party relationship. What are they? An assurance engagement involves 3 parties. That is, one is responsible party, practitioner, user. Who is a practitioner? He is the person who provides assurance. The term practitioner is broader than, obviously. Yes or no? Practitioner is providing not only audit, but also assurance, but also related service. Something else is also providing. Yes or no? And responsible party. Who is responsible party? They are the one responsible for preparation of subject matter. In case of financial statements audit, what is the subject matter? Financial statements. Management is responsible for preparing financial statements. Are you clear? Who are the users? Intended users. They are the persons for whom an assurance report is prepared. Correct? To whom audit report is addressed? To the owners of the company. Correct? And these persons may use the report in making decisions. And audit is related to historical information, whereas practitioner may provide assurance not necessarily related to historical. If somebody asks you what is the difference between auditor and practitioner, auditor generally provides assurance on historical, whereas practitioner may provide assurance other than historical financial information. 3000 series I told na. Assurance engagement standards. Inside that, most of the times they use the word practitioner. Can I use the word practitioner in place of auditor? Yes, we can use, no problem, because practitioner is a wider term. But can we use the word auditor in place of practitioner? Generally not. You clear? See, these are all you need to interpret liberally, not literally. Liberal interpretation is required. Reasonable, depending upon the context, meaning has to be ascertained. There is no hard and fast rule that this means that only. Clear? Clear, all of you? Further, what is another element in an assurance engagement? Because in assurance engagement, practitioner express a conclusion about outcome of a subject matter against the criteria, where the confidence on the intended users will be enhanced. So who is a practitioner, we understood. Who is an intended user, we understood. Who is responsible, what we understood. Now what is subject matter? Subject matter is nothing but information, correct? Subject matter is nothing but information which is to be examined by the practitioner, correct? For example, financial information contained in financial statements while conducting audit. So when we are conducting audit of financials, whatever financial data is there, that is the subject matter, correct? Then what is suitable criteria? It is nothing but benchmark used to evaluate this subject matter, like some accounting standards, guidance notes, laws and rules and regulations, compliance framework, fair presentation framework, all that. Understood? So ultimately tell me, in an audit, what are we doing? We are checking whether financial statements prepared by the management, are they prepared in accordance with Schedule 3? Are they prepared in accordance with accounting standard, Ind AS, all that. Indirectly, responsible party prepare the financial statements. We, practitioner, checking that financial statements, which is the subject matter, whether that subject matter is prepared in accordance with applicable financial reporting framework, and we are giving a report so that users can use the subject matter and take a decision confidently. Are you getting the point? Easy or not? Then now tell me, we are giving assurance, right? How can you give an assurance? Can you give an assurance without evidence of verification? Like you have to verify, correct? A subject matter you have to verify against the criteria. The fact that you verified must be proved no later if somebody questions. If somebody questions later on, hey, what is the proof that you said everything is true and fair? What is the proof that everything is true and fair? Don't worry, I have evidence. So when you are verifying financial statements, when you are conducting an audit, when you are conducting a review, when you are providing an assurance, even when you are providing related service, whatever work you did, you should document. You should document. The process of documentation is must. What you are documenting? Whatever verification procedures I applied. Whatever verification procedures that we apply, we document it. Okay, you are verifying. What are you getting when you are verifying? I am getting some evidence. I am getting some evidence. I said last time financial statements are true and fair on Tata Motors. What is the proof that they are true and fair? Look, I have evidence. You see, this is the evidence I have. Working papers. Documentation will be maintained by auditor. Documentation is nothing but what? Collection of evidences. How much evidence you should get? How much you should get? We can't quantify. Sufficient you must get. How much food you will have? Will you mention 10,900 rice grains? No, right? You mention what? Sufficient amount you will have. Same way, auditor. How much evidence auditor should obtain? Sufficient. What evidence you should obtain? Appropriate. Get sufficient and appropriate evidence. Get whatever is relevant for you. That you get it. Get how many ever you feel important, get that much. Sufficient and appropriate evidence. Tell me, will the sufficiency and appropriateness be same for every auditor or will differ? Exactly. For every auditor, the sufficiency might differ. Appropriateness might differ. Agreed or not? So the practitioner performs an assurance engagement. You perform the assurance engagement. Why you are performing assurance engagement? To give an assurance. First, if you want to give an assurance, first you must get an assurance. If you get an assurance, then I will give an assurance. Yes or no? If I have the confidence, I can tell you that to be confident. So first I should get the assurance. How will I get the assurance? By obtaining sufficient appropriate evidence. Now this evidence, it means what? Evidence. Evidence is the basis of conclusions that are arrived, and an opinion is formed by the auditor is purely based upon evidences collected by the auditor. Suppose purchase a P&L account shows purchases 10,000 crore. I saw randomly 200 purchase invoices I selected. I went and saw no e-way bill, nothing. Evidence is not there. Which means, will I give positive opinion? No. If evidence is not there, what I will do? I'll give negative opinion. Are you getting it? If I have an evidence, yes, 10,000 crore, back and I digged, yes or no? I went deeper. I digged into deeper the books of accounts, all that, getting it. And I found evidences, whatever I want. then I got a satisfaction that purchases is true and fair. Now I will give an opinion that purchases are true and fair. For that I have an evidence or not? I verified so many documents. I took photocopies, I took scanned copies, I took directly Xerox copies, I kept in my file. I communicated with management over WhatsApp, I communicated on the mail, everything I stored in the form of PDF. Are you getting it? Sufficiency relates to quantity of evidence. Appropriateness relates to quality of evidence. Appropriateness means quality. Don't worry, what is quality of evidence, what is appropriateness? We have a dedicated question on that. In SA, we have a chapter called Audit Evidence, 6th chapter, I guess. See, 6th chapter. Audit Evidence, you see, 6th chapter. Just a minute. What is the chapter? Inside that first standard is what? What is audit evidence itself? How many pages discussion is there? 14 pages discussion is there. It starts at 111 and the next standard starts at 125, which means 14 pages we are only discussing about the meaning. So understood, in-depth is there. Are you getting it? We are discussing audit report, right? Report. Ultimately, what is the objective of any assurance engagement? Giving a report. For that, we have a third chapter. You see, report. Third chapter starts at 41st page. Almost 36 pages we have only on report. What is an audit report? We have 36 pages. Yes or no? Then independence, ethics and all is there, na? That almost we have some 7 pages. Terms and conditions in audit we have some 5 pages. For everything you see, whatever we are discussing in this first chapter, nature, objective and scope of audit, we are going to discuss much more in depth in the later chapters. Sampling, we have a standard 530, you see 6th chapter, inside that third standard you see how many, where you see here 132 page it starts sampling. How to select sample, what is sample, on that 15 pages discussion is there. Are you getting it? Now relating to that we just discussed at one place, practical limitation. What are inherent limitations? One of the limitation is nature of audit procedure. Inside nature of audit procedure, one of the limitation is what? Practical limitation. One of the example what we discussed, because of sampling, auditor will not verify 100%. This is a practical limitation. Sample word just we discussed, but we have an in-depth discussion on sampling. 15 pages, 530 standard. Are you getting it? Ratio analysis like that somewhere we got, no? That is nothing but 520 analytical procedure. 10 pages discussion is there. You're getting it? So whatever terms that we are covering in first chapter, nature, objective and scope, it's an overview of the subject. The first chapter is simply speaking overview of the subject. Each and every component that we discussed in first chapter, we are once again going for in-depth discussion later on. Understood? Next. Until now, are you clear? All of you? So evidence related discussion, what is sufficiency, what is appropriateness, we have a dedicated standard itself on that. Audit evidence standard is there we will discuss. Here we will briefly discuss what it is. C point strike off not required. Ultimately in an assurance engagement what we give? Written report, correct? What is the outcome of an assurance engagement? Written report. A written report is provided containing conclusion or opinion, correct? Containing either conclusion or opinion that conveys assurance about the subject matter. Whether the subject matter is right or wrong, we will give assurance through assurance report. In audit we call it as audit report. In review we call it as review report. A written assurance report is the outcome of an assurance engagement. So what is an assurance engagement? What are the elements of assurance engagement? Assurance engagement is an engagement in which practitioner will express a conclusion on the subject matter prepared by the management for the intended users, confidence enhancing, correct? What are the elements of assurance? 3 parties will be there, subject matter will be there, criteria will be there, evidence will be obtained and assurance report will be given. That's it. So what are the elements of assurance engagement? 4 marks question might come. So this is how you need to write. Easy. All of you. Next. That's it. We'll just take 5 minutes break and then continue in the next session. Okay. That's it. Let's continue the discussion. See, here if you observe, here there is a discussion called assurance engagement, right? Whatever works that we do, we classify them into two types: assurance engagements, non-assurance engagement. We can provide assurance on past financial data or prospective financial information, correct? We can provide assurance on historical past financial information or prospective on both we can provide assurance. Now when it is past, that too if you are giving reasonable assurance, that assurance engagement is called as audit engagement. If at all you are providing assurance on historical financial information where the assurance level is limited assurance, that assurance engagement is called as review engagement. Suppose if I am providing assurance on prospective financial information or on controls I am providing assurance, that assurance engagement is simply called as assurance engagement. Understood the difference? Don't confuse, sir. There it is assurance, below it is also assurance. Why? For prospective financial information, for controls related assurance engagement, they didn't put any separate name. That is simply called as assurance engagement. Whereas if at all you are giving assurance on historical financial information, that too you are providing reasonable assurance, that is also assurance only, but it was given a specific name. What is that name? Audit. If at all you are giving limited assurance, it was given a specific name. What is that? Review. That's it. At the end of the day, all are assurance engagements only. In all of this, what we provide ultimately, we give conclusion. We express our conclusion. Whatever we conclude, we express that. If we conclude that everything is good, we express that. If we conclude something is wrong, we express that. In audit, that conclusion is referred as opinion. Whereas in review, the conclusion is simply referred as conclusion. Whereas in assurance engagement on prospective, there also conclusion is referred as conclusion. Understood? Getting it? Just that at certain assurance engagements, they gave a specific name. Certain conclusions were given a specific name. That's it. At the end of the day, opinion is also a conclusion. Conclusion is also a conclusion. Correct? A conclusion means what? I verified everything and I concluded that everything is true and fair. That conclusion I will express through a report. That report is called as what? Assurance report. In audit it is called as audit report. In a review it is called as review report. At the end of the day, both are assurance reports only. Understood? I think now it is clarified. Yes. So now write about the meaning of elements of no, like the question is there any limited assurance on other than historical? Nothing, but on prospective financial information, do we have a limited assurance? Reason with that classification, there is no such classification. By default, on prospective, tell me anything about future, can we reasonably ascertain? It is only moderate. If at all we are giving any assurance on future, what level of assurance it will be? It will be reasonable, huh? It will only be moderate. Are you getting it? That to tell me anything about future is purely based on assumptions. Correct? Huh? Now when I have to verify prospective financial information, tell me logically, let us understand. If I have to verify prospective, how future financials are prepared? That is based on some assumptions. Now tell me, when assumptions are used for preparing future financials, what I should verify? The actual future numbers which they projected, which they expected, that I should verify, or the assumption should I verify? Which one is right approach? Should I verify? See, based on some assumption, future sales are this much, future purchases are this much, future profit is this much, they estimated. Now, is it better to verify those numbers, or is it better for me to verify assumption? Assumption I will verify. Is this assumption reasonable or not? I will verify. That is better. If the assumption is reasonable, numbers are same, no. If the assumption is correct, numbers will be correct. If assumption is wrong, numbers will be wrong. Which is what I should verify? Assumption. Assumptions are the source. For prospective financial information. Tell me, even in audit also, financial statements we need to give opinion whether they're right or wrong. For that, what we verify? Books of accounts. Whether financials are matching with books. Whether books of accounts containing journal entries, are they supported by bills and vouchers? Source only we are verifying, no, everywhere. In audit also we are verifying source. Even in prospective financial information also, what are we verifying? Source. Everywhere we ultimately see source is what? That number you gave balance sheet P&L of past, that's okay. You gave balance sheet P&L of future, that is also okay. For what, whether it is past or whether it is future, what is the source data? That source data is what we are verifying ultimately. Are you getting the point? Getting it? But the standards clarified that anything related to future is only a moderate assurance. It can never be reasonable assurance. Can I give a high level of assurance on future? Reasonable assurance is what? High level of assurance. Reasonable assurance is a high level of assurance, but not a complete assurance, but not an absolute assurance. Correct? So about future, can I give a high level of assurance? No. I can only give moderate level of assurance. Now again, review, what assurance we call it as? In a review, limited assurance. About future, what are we calling it as? Moderate assurance. What is the difference between limited assurance and moderate assurance? What is the difference? Both are same. Wordings alone different, that's it. Limited assurance is also moderate assurance. It's not a high level. Moderate assurance is also not a high level. Are you getting it? Is limited assurance high level of assurance? No, it's a moderate level of assurance. What about moderate assurance? That's a moderate level of assurance, that's it. Are you getting it? Just that they have used the word moderate, but that is also actually refers what? Limited. Because there also how we give opinion, how we give conclusion, nothing has come to my attention to say that the assumptions are wrong. That's how we give. Even in limited assurance, what we tell, nothing has come to our attention that the financial statements are not true and fair. Are the financials not true and fair? Nothing has come to my attention to say that. Same way for prospective, how we give, nothing has come to my attention to say that assumptions are unreasonable. We indirectly tell what? Whatever assumptions they used to prepare prospective financial information, are they reasonable assumptions or not is what we are verifying. If at all, if you felt you did not get anything wrong, you did not get any contrary evidence that the assumption is wrong, you say that nothing has come to my attention that this assumption is wrong. Indirectly, am I saying? Indirectly, what am I saying? Assumptions are reasonable. But I'm not straight away saying assumptions are reasonable. I am saying indirectly, assumptions are not unreasonable. To say that they are unreasonable, I don't have anything. I didn't get any evidence to say that assumptions are not reasonable. So indirectly, to say that assumptions are wrong, I don't have any evidence. It doesn't mean I have evidence that assumptions are right. Agreed or not? Same way, with respect to review, limited assurance, I am not saying that financial statements are true and fair. I don't have evidence to say that they are true and fair. I don't have evidence to say that they are wrong. Both are different. Both are different or not? Are you getting it? So, write about the meaning of review and difference between audit and review. So now we are getting more in-depth discussion. So we have learned that audit is a reasonable assurance engagement. It provides reasonable assurance. However, review is a limited assurance. It provides lower level of assurance than audit. Means audit will give you high level of assurance, but review will not give you that high level, lower than high. Correct? Lower than high level of assurance. Further, review involves few procedures. In audit, no, we do so many procedures, whereas in review, only few procedures. More clearly, in review, no, we only do inquiry and analytical procedure. In review, we do inquiry and analytical procedure, whereas in audit, we do inquiry, analytical procedure, inspection, observation, physical verification, recalculation, reperformance, external confirmation. So many we do in audit. In audit, no, fixed assets are there or not. I will go physically and check. Inventory, I'll go down physically and check. I will ask third parties to send me bills and all. In a review, I need not do all that. Why? You need not give high level of assurance in review. In review, just to see basically, if nothing is wrong, just say that nothing is wrong. That's it. So that's why in review, we just to do two types of procedures. What are they? Inquiry and analytical. Now tell me, compared to audit, are we doing fewer procedures in review? In audit, you see so many we are doing: inquiry, AP, inspection, observation, physical verification, recalibration, reperformance, external confirmation, scrutiny, so many. Whereas in review, we are doing only two procedures. So review involves fewer procedures than audit. Agreed? So review involves fewer procedures and gathers evidence on the basis of which limited conclusions can be drawn. Getting it? In review also, I get sufficient appropriate evidence, but related to few procedures only. Through inquiry, I get whatever sufficient data I want. Through AP, I get whatever sufficient data I want. But I will not get that much sufficient data where I get in audit. Are you getting it? For giving limited assurance, whatever is sufficient, that is enough. For giving reasonable assurance, whatever is sufficient, that level is different. Correct? Just because sufficient appropriate evidence word is used in audit, sufficient appropriate evidence word is also used in review. In both the cases, you should get sufficient evidence. But the level of sufficiency is different. Agreed or not? Level of sufficiency is different. Exactly. However, both audit and review are related to financial statements prepared on the basis of historical financial information. So what is the difference? This itself straight away can ask, what is the difference between limited assurance and reasonable assurance? They will give you 4 marks questions straight away. They may give you as a 4 marks question. What write about difference between limited assurance and reasonable assurance? What is a reasonable assurance? It is a high level of assurance. What is a limited assurance? That provides lower level of assurance than reasonable assurance. Reasonable assurance engagements, nothing but audit. Audit involves auditor performs elaborate extensive procedures to obtain sufficient. What are the elaborate and extensive procedure? Inspection, observation, confirmation, recalculation, reperformance, inquiry, analytical procedure, yes or no, physical verification, so many elaborate procedures you do. Whereas inquiry, fewer procedures, means only inquiry, analytical procedures, only these two you will do. Depending upon necessity, additional procedures also might be performed, but basically you just have to do inquiry and analytical procedures. Understood or not? So in audit draws reasonable conclusion on the basis of evidence, whereas in review it involves obtaining evidence to draw limited conclusions. In a review we draw limited conclusion, whereas in audit we draw reasonable, but at the end of the day, in both the cases you draw some conclusions, but in audit we get reasonable conclusions, whereas in review we get limited conclusions. Are you getting it? Example of reasonable assurance engagement is audit, whereas example of limited assurance engagement is review. Simple. 4 marks questions, right? Understood? So review, reasonable assurance, audit is a reasonable assurance engagement, review is a limited assurance engagement. The same can be asked like this: write about difference between audit and review. In that case also the same points you should write. Are you getting it? So at that time what you will write? Audit is a reasonable assurance engagement, review is a limited assurance engagement. Reasonable assurance engagement is a high level of assurance, limited assurance is a lower level of assurance than a reasonable. In audit, the auditor performs elaborate and extensive procedure, whereas in review the auditor performs fewer procedures. In audit, auditor draw reasonable conclusion. In review, the auditor will draw limited conclusion. And audit engagement is a perfect example of reasonable assurance, whereas review is a perfect example of limited assurance engagement. You see how I modified the answer? If at all the question is audit versus review. Are you getting it? Same points, just slight change in wordings. Understood? That's it. So next, question number 12. Write about assurance engagement related to subject matter other than historical financial statements. Other than historical financial statements, if at all assurance we are providing, what standards apply? Standards on assurance engagement will apply. Standards on assurance engagement will apply. Now, other than historical means what? Prospective financial information, or it may be dealing with the control set service organization. Clear? Now, so here you see, Besides reasonable assurance engagement and limited assurance engagement, which are dealing with the subject matter, historical, financial information, there is another kind of assurance which is related to subject matter other than historical information. Such an assurance may relate to what? It may relate to what? Prospective financial information, and sometimes it is, and prospective information are not related to historical, or it may also relate to providing assurance on internal controls in an entity. Are you getting it? That entity may be service organization. That entity is called as what? Service organization. So we provide assurance not only on historical financial information, but we also provide assurance on prospective information. Also, we provide assurance on controls of an entity. Correct? What is prospective? Prospective financial information means financial information based on assumptions. Correct? Anything about future is based on assumptions about events that have already occurred, that may occur. That may occur in the future. And in future, company will take some actions. No, are they already taken, or possible actions? And possible actions by the entity. It can be in the form of a forecast. It can be in the form of a projection. It can be in the form of a both combination of projection and forecast. Forecast means next 1 year. Projection means next 5 years. Next, tell me, upcoming 3rd or 4th year, prospective information if you prepare, will that be best estimate, or next 1 year could be the best estimate? Next 1 year I can estimate in a best way. But remaining 2nd year, 3rd year, 4th year in the future, that also I'll estimate, but based on hypothetical assumptions. Correct? It may happen, it may not happen. Whereas next 1 year, I can take assumptions which are best estimates. Agreed or not? Next 1 year, I can take assumptions which may be best. Whereas assumptions about 2nd, 3rd, 4th, 5th later on, they are all best estimate assumptions are hypothetical. They are hypothetical means uncertainty is very high. Best estimate assumption means uncertainty is low. But in both the cases, uncertainty is there. Because both are dealing with future. Both are dealing with assumptions. Are you getting it? Suppose if I prepare prospective information based upon best assumptions, that is called forecast. If at all prospective information is prepared based on hypothetical assumptions, that's called projection. Prospective information can be a combination of forecast and projection. Next 5 years financials. First year is forecast, remaining 4 are projections. That's how we can do. Are you getting it? We have an in-depth discussion in CA final on this. We have 3000 series standards. 3000 is there, 3000, 3402, 3420, like that. There are 3 standards dealing with this PF5. Are you getting it? And so prospective information means what? It's a financial information based on assumptions about events that may occur in the future and possible actions by the entity. It can be in the form of a forecast, or it can be in the form of a projection, or it can be in the form of a combination of both. It is to be noted that in such type of assurance engagements, examination is not of the historical information. Correct? In these engagements, we don't examine past. We examine assumptions about the future. Here, it is important to note that there is a difference between historical information and prospective information. Correct? The former means, in this case, first what they referred? Historical. So historical relates to information expressed in financial terms about economic events and conditions that occurred in the past. Whereas the later means what? Here, first historical, second what they referred? Prospective. Second means what? Later, na? Yes or no? So the later relates to financial information based on assumptions about occurrence of future events and possible actions by the entity. Therefore, historical financial information is rooted in past, which have already occurred, whereas prospective financial information is related to future events. Correct? Now tell me, when we are giving assurance on prospective, which is based on assumptions, can I give high level of assurance? No. What is the level of assurance? Less than high. That is called as what here? Moderate assurance. Correct? So, in assurance reports involving prospective financial information, in assurance reports involving prospective financial information, the practitioner obtains sufficient appropriate evidence to effect that management's assumptions on which PFI is based are not unreasonable. How practitioner gets? I will get an evidence that management's assumptions are not unreasonable. Getting it? I will have evidence that they are not unreasonable. I don't have evidence that they are reasonable. I am not saying I have evidence that they are reasonable. I am saying I have evidence to say that they are not unreasonable. I am saying they are not bad. For that I have evidence. Do you have evidence to say that they are good? No, I don't have that much evidence. I have only that much evidence, limited evidence, where I can say it is not bad. Understood? Next. So, the practitioner obtains sufficient appropriate evidence to effect that management's assumptions is based on some management's assumptions about PFI is based on some, I mean they are not unreasonable. Then the PFI is prepared on the basis of assumptions, and it is properly presented. All assumptions are adequately disclosed. You know, in general in PFI, one of the disclosure requirement is what assumptions company used to prepare the PFI, to prepare prospective financial information, what assumptions the company has used. Getting it? All those assumptions they need to present. Clearly they need to present. Not only that, they should also present something called sensitivity analysis. There is something called sensitivity analysis. What is a sensitivity analysis? Tell me, assumptions might change. So what are the alternative assumptions possible? For example, inflation rate is an assumption or not? Suppose what is the next year's sales? Next 5 years company predicted how much sales would be. For that inflation rate 5% they used. And accordingly, what is the profit of the company? Purchases cost, everything. Expenditure is used with 5% inflation. Sales also used with 5% inflation. There are some fixed items where inflation won't affect. So considering inflation, they prepare prospective financial where the assumption related to inflation is 5%. But this inflation rate can go 7%, or inflation can be sometimes 10% if at all some adverse economic scenario suddenly arises like COVID. Inflation rate suddenly rises. Now you need to present alternative picture also, right? What if inflation is 10%? How much would be the sales? How much would be the expense? How much would be the profit? What if inflation rate is 8%? What would be the sales, purchases and profit? If inflation rate is 12, what would be the all this result? That kind of, trial and error method you must show. You must show like a sensitivity. This is called sensitivity analysis. Sensitivity analysis, if assumptions under changes, if the assumption changes, how it will affect the picture, how it will change the future financial picture. That disclosure also you must give. In PFI, this is required. Are you getting it? All of you? Petrol bunklo zero paatha madri paathitu irukeenga. You're all see fine? Yeah. It's okay. Come back. It's actually a Santanam joke. Fine. So, in assurance reports, okay, get back. So, in an assurance reports involving prospective financial information, the practitioner obtains sufficient appropriate evidence to effect that management's assumptions on which PFI is based. Yes or no? PFI is based upon some assumptions. They are not unreasonable. Are they not unreasonable? For that you must obtain evidence. You should get an evidence that they are not unreasonable. Getting it? And say that they are not unreasonable. That's it. In opinion report also you will say that nothing has came to my attention. Nothing came to my attention to say that they are not. Yeah, exactly. Hence, such type of assurance engagement provides only moderate level of assurance. So, prospective financial information relates to future event, while evidence may be available to support the assumptions on which PFI is based. Such evidence itself is future oriented. Now, why you took that assumption? Depending upon the present circumstances. Sir, why you took inflation rate of 5%? See, sir, last 5 years inflation is 5% only. That's why I'm taking 5%. But assumption about future, na, that itself, assumption evidence itself is future oriented. Therefore, the auditor is not in a position to express opinion. Opinion means what? Reasonable assurance as to whether results shown in the PFI will be achieved or not. You can't express opinion. Sir, company next 5 years profit and all they showed. No, banker is asking you, will the company achieve it, sir? Sir, I am not talking about whether company will achieve it or not. The company prepared that PFI based on assumptions. These assumptions as on today they made. Today, based upon the present economic conditions, present entity position, these assumptions were made about the future. This is not unreasonable. This I can tell you. I don't know whether that number and all will be achieved in reality or not. Are you getting it? You know, we have a prohibition. I think we have in Schedule 2, I guess. Schedule 2 in CA Act. CA Act, we have something called Schedule 2. Inside that Part 1, inside that there is some clause number 2 or clause number 3. Some clause is there. Okay, it prohibits a chartered accountant in practice to certify prospective financial information. You cannot. You should not certify prospective financial information. However, exception is there. If you clearly mention the assumptions, clearly mention that this PFI you didn't verify, you only verified assumptions, and clearly mention that you don't know that they might be achieved or not in the report that you're going to give on the PFI. Suppose client is asking you, sir, can you please provide me assurance report on the PFI? So if your report is there, people will believe it. I will give report, no problem, but I will mention all these assumptions. That the PFI is based on assumptions, and I only verified assumptions that they are not unreasonable, and I have not verified whether that numbers can be achieved or not. I clearly mention all these disclaimers in the report, then no problem. Without mentioning all this, you certified the PFI, where it appears like you are promising people that future company will perform like this. If it appears to the public that you are promising about the company, you are giving guarantee about the company, you are punishable. You are treated as guilty of professional misconduct. You are treated as guilty of professional misconduct under clause number 3, part number 1, schedule number 2, CA Act. We will get this in CA final. Understood? Yes. Therefore, in such assurance engagement, practitioner provides a report assuring that nothing has come to his attention to suggest that these assumptions do not provide a reasonable basis for the projection. You see how cleverly we are using the wordings? Nothing has come to my attention to say that these assumptions are not reasonable. Yeah. Are they not reasonable? To say that I don't have anything. To say that they are not reasonable, to say that the assumptions are not reasonable, I don't have anything contrary to prove. Nothing has come to my attention that causes me to believe that these assumptions are not reasonable. Understood? They'll give you an exam. Write about moderate assurance, 4 marks question. Write about moderate assurance. They'll give you a 4 marks question. Clear, all of you? So write about assurance engagements related to subject matter other than historical financials. So besides reasonable assurance, besides limited assurance, there is another kind of assurance that is related to subject matter other than historical. That assurance may related to PFI and not related to historical. It may related to providing assurance on controls of an entity. It may be prospective or it may be controls, whatever it is. So PFI means financial information based on assumptions about events that may occur in future, possible actions and decisions that can be taken by entity. Either it can be in the form of a forecast, or it can be in the form of a projection, or both. So PFI, in what form you will present? I will present it in the form of projected financials. I will present them in the form of forecast, or I may present them a combination of forecast and projection. It is to be noted that in these engagements, examination is not of the historical. Yes or no? Auditor will mainly verify what? Assumptions. Like here it is important to note what is the difference between historical information and PFI. The former related to information that is given in financial terms. Historical financial information means information given in financial terms about events occurred in past, whereas the later related to information in financial terms. That is also information. PFI is also information given in financial terms, but based on assumptions about occurrence of future events, assumptions about possible decisions the entity can take in future. Correct? Therefore, historical information is rooted in past, whereas PFI is rooted to future. And since PFI is based on assumptions about the future, giving high level of assurance is not possible. Therefore, we give which level of assurance? Moderate level of assurance. In assurance report involving PFI, the practitioner obtains evidence to effect that management's assumptions are not unreasonable. Management's assumptions are not reasonable or not unreasonable, both convey similarly. Getting it? The prospective information is properly based, properly prepared on the basis of assumption, and it is properly presented and all material assumptions are adequately disclosed. In PFI, what we check? Whether PFI, which may be projection, which may be forecast, is it prepared based on the assumptions, and whether these assumptions are clearly disclosed. That's what we check. And hence such type of assurance provides only moderate level, because giving high level of assurance is impossible. Prospective information is related to future event. Evidence may be available to support assumptions on which PFI is prepared. PFI is prepared based on assumptions. Why you took that assumption? I have some evidence why that assumption is taken. But that assumption itself, the evidence itself is future oriented. Past inflation data is not evidence for future inflation. In the past 5% is the inflation. Can I say future also will be 5%? Based on the past 5 years, I took an assumption that the future inflation rate is also 5%. But the future inflation rate of 5%, that is also, I mean, assumption only, right? That is also not evidence. There is no evidence for that, right? Yes or no? So, therefore, in such assurance engagement, practitioner provides a report assuring that nothing has come to his attention to cause him to suggest that these assumptions do not provide reasonable basis for the projection. I cannot say that these assumptions are not reasonable for the projection. Are you getting it? Are these assumptions reasonable for the projections? I don't say they're reasonable. But are they not reasonable? I don't have anything to say that they are not reasonable. Understood? Clear? That's it. So another major topic is also over. Now you see, review we understood. Audit means we understood. What is the difference between audit and review we understood. Then we also understood about what? Assurance engagement we understood. Now we will understand related services. I think they have given it as part of standards directly. I told, right, there is something called standards on related services. Lastly, there are standards on related service. These standards apply in engagements to perform agreed upon procedures regarding financial information. So you are doing some agreed upon procedures related to financial information. Agreed upon procedure. For example, an engagement to perform agreed upon procedure may require auditor to perform certain procedures regarding some individual items of financial data like trade payables, trade receivable, purchases from related party, sales, profits from segment, balance sheet, or even a complete set relating to some financial information. You perform some procedure. Are you getting it? So that is called as what? Agreed upon procedure. If you remember, I told you something called stock audit as an example, but I told you there it is a quantity. Quantity is not financial, right? Getting it? I just told it as an example, but stock audit may not exactly come under agreed upon procedure, may not exactly come, but that is something like agreed upon procedure. That is something like agreed upon procedure. But specifically, we have a standard called 4400. There is a standard called 4400, agreed upon procedure in relation to financial information. That only deals with what? Financial information. Inside that standard, they told one more point. If at all agreed upon procedures are performed in relation to non-financial information, whatever principles given here can be used by the auditor for non-financial information as well. Originally, the standard is dealing with what? Agreed upon procedure standard is dealing with financial. But if at all you are providing some agreed upon procedure for non-financial, this standard can be applied subject to some modifications. They told you this. So whatever principles they outlined in the standard, you know what 4400 standard contains? First, you should have clear terms and conditions with the management on what exactly you have to perform. What is your duty? What is their duty? Who will give information? How to give report? What is the timeline? Entire precautions you have to take, right? Those precautions are only given under 4400. Now these precautions are common, right? Whether you are performing agreed upon procedure for financial or whether you are performing agreed upon procedure for non-financial, the precautions remain same. Correct? Why precautions? Tell me why all these standards are there to protect you ultimately. Please do work as per the standard. You are protected. You see NFRA order. What are they saying? Auditor has not followed standards. That's why we are levying penalty. You follow standard happily. You are covered under, you are protected. That's it. Even though any big incident happened later on in that company, it doesn't matter. It doesn't affect you as long as you prove that you conducted audit, you conducted assurance, you conducted review, you conducted related service as per respective standard. As long as you prove that you followed standards, you followed rules, you followed regulations, you are able to prove that you are protected. Are you getting it? Then another related service is what? Compilation engagement. Compilation engagement is what? In this engagement where practitioner may be called upon. Why are you calling upon? To assist management with preparation and presentation of historical information without obtaining assurance. You need not give any assurance. You just help them to prepare financial information. Such type of compilation engagements falls in the category of related services, and here also practitioner issue a report clearly stating that it is not assurance and no opinion is expressed. You will clearly give a report that I only helped management in preparing financials. I am not giving any assurance. I am not giving any opinion. So please be aware, readers. If at all somebody says so and so CA is involved in preparation of financials, remember I only involved in preparation. I am not talking about accuracy of the financial statements. I don't know anything about the financial statements. Are you clear? These types of services are called as related services, and standards have been issued so that standards have been issued to deal with the practitioner's responsibilities. 4400 engagements to perform agreed upon procedure relating to financial. And I told you, even if it is non-financial information, this standard can be used. Whatever principles given in the standard can be used for non-financial information also. SRS 4410 compilation engagement. Two standards were issued. SR 4410, which is for compilation. SRS 4400 is for agreed upon procedures regarding financial information. You know, MCQ might form here. MCQ might come here. They'll give you which of the following is dealt by SRS 4400. Option A, engagements to perform compilation on financial information. Option B, engagements to perform agreed upon procedures. Option C, engagements to perform agreed upon procedures for non-financial information. Option D, engagements to perform agreed upon procedures on financial information. Option D. Correct? Don't worry, I'll write. Option A. Okay, engagement to perform compilation engagement on financial information. Option B, engagement to perform agreed upon procedure. Option B, engagement to perform agreed upon procedure related to non-financial information. Option D, engagement to perform agreed upon procedure relating to financial information. Now this is wrong. This is wrong. This is not wrong. Correct? This is right. Are you getting the point? Sometimes options will be like this. 4 options. How 4 options will be? Like, see, MCQs, no, the possibilities will be like 3 wrong answers, 1 right answer. You're getting it? 3 wrong answers, 1 right answer. 3 right answers. No, that one, I told. Yeah, correct only, yeah. 3 right answers, 1 wrong answer. Sometimes 3 not right answers, 1 wrong answer. 3 not wrong answers, 1 right answer. Yes, I'll tell you. In our CA, no, in our CA inter, no. Definitely out of, right, 15 MCQs you will get. 30 marks paper is MCQ, right? Each MCQ will carry 2 marks. 15 MCQs they'll give you, where at least 5 to 6 MCQs might come under these 2 categories. Where it might come under these 2 categories. At least 5 to 6, or sometimes all the 15 also. Like, you might have felt the situation, sir, all the 4 right only. Like for the given question, all the 4 are right. They are right, but you need to, if you clearly observe, 3 are not, 3 are not wrong. They're not wrong, but 1 is right. For example, in this question, SA 4400, it is dealing with agreed upon procedures only, right? It is not wrong. Technically, it is not wrong, but it is dealing with agreed upon procedure related to finance. It is even more right. Agreed? This is right answer. So that's how you should categorize. Not MCQ by default, many students think MCQ means 4 options, 3 will be wrong, 1 will be right, or 3 will be right, 1 will be wrong. And the question will be, which of the following is not right? Which of the following is not true? Means 3 wrong statements they'll give, 3 right statements they'll give, 1 wrong statement they'll give, easy to pick. Which of the following is true? 3 wrong statements they give, 1 right statement they give, easy to pick. But sometimes they'll give you 4 options, which of the following is true? All the 4 statements are true only. Are you getting it? Like option A, you are a CA student. Option B, you are a CA Inter student. Option C, you are a CA Inter student attempting January 25 attempt. Option D, you are a CA Inter student attempting group 2 of January 25 attempt. All the 4 are right only, no? Yes or no? Which is true? Exactly. All the 3, above 3 are not wrong. So that's how MCQs. You see, definitely 1 or 2 MCQs will be there in every MTP like this. So when you have such a kind of, you should split the options like this. When you confuse, all 4 appear same only, which is right if you get, then do this analysis. How many are not wrong? Which is exactly right? You're getting my point? So sometimes, no, which of the following is false? Which of the following is incorrect? They'll give you. 4 options are incorrect only, but 3 are, they are not right, but 1 is absolutely wrong. That you should pick up. Understood? This kind of questioning will be done in tax, in audit, in law, everywhere this is possible. Are you getting it? Hey, all of you, have you noticed this kind of scenario when you're solving MCQs? All the 4 appear same only, all the 4 right only, then why this answer is alone is selected? Because remaining are not wrong, this one is absolutely right. Within the right, one is lesser right, another one is more right. Are you getting it? Which means one have higher level of assurance, another one have lower level of assurance. That's exactly. Next. So understood? So standards on related services. What are they? These standards apply in engagements to perform agreed upon procedures regarding financial information. But remember, in CA final, we have 4400 standard. Inside that, one clarification they gave. What clarification they gave? The principles given under this standard can also be applied for agreed upon procedures involving non-financial information, but primarily the standard is dealing with financial information. What is an agreed upon procedure? An engagement to perform agreed upon procedure may require auditor to perform certain procedure regarding some individual financial data. Suppose a company called me, sir, we have so many trade receivables, sir, we need to prepare aging analysis. We need to prepare aging analysis. Like we need to prepare less than 30 days, more than 30 days, more than 6 days, more than 90 days, more than 3 months, more than 6 months, more than 1 year, more than 2 years. Can you please come? These are our trade receivables. 1,500 debtors were there. You please take, look at identified due dates. You just segregate into aging report and then give us. Enough. This is an agreed upon procedure. Yes or no? So it may be related to accounts payable, accounts receivable, purchases from related parties, sales, profits of a segment. Some companies, no, they may call you, sir, we have to prepare segment reporting, sir. Segment reporting and all, we don't know anything, sir. So can you please come and assist us to prepare segment reporting? If at all it is something like segment reporting preparation for the purpose of inclusion in financial statements, it might come under compilation. It might come under compilation. Suppose I called an auditor, sir, please help me to prepare segment information. Why? For our internal analysis. Then agreed upon procedure. Sir, for the purpose of preparing financial statements so that we can publish to third parties. Then it is compilation engagement. Understood? Then compilation means what? It is also an engagement. It is also work where practitioner may be called upon to assist management with the preparation and presentation of historical information without providing assurance. Such type of compilation engagement fall under the category of related services, where practitioner will issue a compilation report mentioning specifically that this is not an assurance, no opinion is being expressed. Clear? These types of services are called as related services, and standards have been issued to deal with practitioner responsibility in this regard. 1. SRS 4400, SRS 4410, 4400 engagements to perform agreed upon procedure related to financial information. 4410 compilation engagement. Clear? See, I am taking my entire stress to ensure that you all get 80 plus in audit. I require equal support from you. Getting it? Yes. I'm telling you, it is very much possible to get 80 plus if at all we are having crystal clear clarity and revise, analyze, summarize properly. Yes or no? Yeah. Next. Then we have various other standards. What are they? First of all, like again, once again, just a minute. We have so many standards. As I already told you, 46 standards we have, 45 standards we have, 1 quality control standard we have. Remember I told you? Totally 46 standards we have. 38 standards deals with audit. 2 standards deal with review. 3 standards deal with assurance. 2 standards deal with related services, and 1 is dealing with the quality control. Getting it? Total we have 46 standards. We only have auditing standards that are predominantly dealing with general purpose financial statements in our CA Inter syllabus. That too, within auditing standards, we don't have 402, we don't have 540, we don't have 260, no, we have all that. 240 fraud we don't have in our syllabus. 240 we don't have. 402 we don't have. 540 we do not have. 620 we do not have. 620, 600. These 5 standards we do not have in our CA Inter. Yeah, correct. So what are they? We don't know what standards we do not have in CA Inter. Let's come. 240, 402, 540, 600, 620. These standards we don't have. Sorry, 720 also. 720. These 6 standards we do not have in our CA Inter. Of course, 800 series, 2000 series, 3000 series, 4000 series, that and all we don't have. We only have introduction to them. That's it. What is 2000 series dealing with? What 3000 dealing with? What 800 dealing with? Only introduction to it we have. That is what this question is. Clear? So, among 35 auditing standards, these are 6 standards we do not have, which means we are having in our syllabus how many? 29 standards on auditing. Whereas in CA final, you once again have entire 35 standards. But these 6 will be discussed, of course, in depth. Out of 29 which we have, no, few standards are discussed only at a basic level. And these standards once again will come in CA final, but where the discussion will be in depth. Are you getting it? So in CA final, the discussion will be little bit in depth. That's it. So if at all, I'm telling you, if you're strong in CA Inter audit, final audit is very easy for you. Many of my final students I notice where they struggle, some of them struggle a lot because their inter syllabus, they didn't study properly audit. They qualified some 40, 45, 50 also they might have got. Some of them might have got even exemption, but they got fluke. Means just like that they got. But when you test them, they know nothing. Are you getting it? So if you have proper conceptual clarity, this will help you in articles also. You go Big Four, they'll ask any interviews and all in articles, but you can answer. With this kind of knowledge that you are getting in this class, you can answer any sort of question in audit related interview. Remaining subject, I don't know, but audit I can assure you. I can give you high level of assurance. Okay. Yes. Not even high level, I can give absolute assurance. Yeah. So now, as I told, we have already total 46 standards, right? These standards are actually called as what, engagement and quality control standards. These standards are called as engagement and quality control standards. Engagement and quality control standards. We have totally 45 engagement standards. We have only one quality control standard. Quality control standard is SQC1. Engagement standards 45. These engagement standards are broadly divided into assurance engagement standard, non-assurance engagement standards. Non-assurance engagement is what? Standards on related services. Two standards were there, 4400, 4410. Assurance engagement, again they're dealing with what? Historical financial information other than historical financial information. Other than historical financial information, we call standard on assurance engagement. This is 4000 series, this is 3000 series. We have 3000, 3402, 3420, three standards we have. Then we have on historical. On historical, we have how many types? Reasonable assurance, limited assurance. Reasonable assurance is called as SCA, standards on auditing. Limited assurance is called as SRE. Under SRE, we have 2400, 2410, two standards we have. Then in audit, we have again two classes, predominantly dealing with general purpose, predominantly dealing with special purpose. We have 800, 805, 810. Whereas here we have 200 series to 700 series. This is 35 standards. This is 3 standards. This is 2 standards. This is 3 standards. This is 2 standards. Getting it? Like 2. So I'll write with a different color. So SRS we have 2. Other than historical financial we have 3. Review engagement we have 2 standards. SPFS, special purpose, we are having 3 standards. Predominantly dealing with general purpose 35. 35 plus 3. 38 plus 2, 40 plus 3, 43 plus 2. How many we have? 45 plus 1 standard, quality control standard. Total 46 standards we have. Getting it? And out of these 35, 6 standards we don't have at all in the syllabus. What standards we don't have at all? 240, 402, 540, 600, 620, 720. These we don't have in our syllabus at all. Clear? I will not give once again standards breakup later. This itself is the breakup. Clear? So all these standards, whether audit, review, assurance, related service, quality control, whatever it is, all these are collectively called as what? Engagement standards. Quality control standards, put together engagement and quality control standards. Understood? So what are engagement and quality control standards? The following standards are issued under the authority of ICA Council, are collectively known as engagement standards. Tell me, who will issue accounting standards? Accounting Standards Board. Have you heard of? NFRA. ICI Accounting Standards Board will issue standards after consultation with NFRA. Have you heard of Accounting Standards Board? Have you heard of Auditing and Assurance Standard Board? Huh? Have you heard of the word council? ICA Council? ICA Council? What are they? I'll show you. ICA website. Still 5 more minutes. We'll finish this off and then we'll take a break. Okay, 5 to 7 minutes. We'll take a break. At least 1 hour. At least we need to be attentive. No. Okay. Yeah. I'm giving adequate breaks to you. Now this is ICA website. You see here overview. Correct? Overview is there, no? You see here, this is called council. Council is nothing but board of directors of ICA. In a company, we call them as what? Board of directors, top management. In ICA, we call them as council. Totally in ICA, 40 council members will be there, 40. From southern region, 6 members will be there. From southern region, these are all called as what? These are all, we refer them as central council members. We call them as what? Central council members. Again, central council member is different, central region is different. These are all board of directors. Getting it? These directors are selected from southern regions, central region, north, east, west, south. Getting it? NIRC, EIRC, WIRC, CIRC, SIRC. 5 regions. From 5 reasons, central council members will be elected. In the coming December, elections are there. Getting it? Members have to go and vote. Getting it? So ICA, you know how ICA operates, you know? ICA operates with a, you know, this one. Central council will be there. Central council, regional council, local council, I can say local management or branch level management. Like Chennai branch of ICA is there. For that, branch management will be there. And below that again, student student councils are also there, where students will be the management. Yes or no? Sikasa, for example, Nikasa, Vikasa, Sikasa, all that is there. Getting it? So now branch level management, this is also CS only. Regional level, SIRC council, WIRC council, NIRC council, CIRC council, EIRC. These are all regional managements. In a bank, no, branch manager will be there, state level manager will be there, regional level management will be there, central top level India level management will be there. Central council is India level. Regional level means what? Southern India, some management will be there, some heads will be there. East India, some heads will be there. Again, within Chennai, branch management, they will have again some management. All of them are CS only, but the scale of authority is higher. As it go higher, the scale of authority will. Now I'm talking about what council means. Who will come under council? Central council only will come under council. These are the people who literally run ICA. Are you getting the point? So like you might be finding some tweets, you know, regarding exam results. Yes or no? Some central council member, nothing but these central councils. These people are 40. 32 members are elected by chartered accountants. 8 members are nominees of government. From central government, nominees will be there. SEBI nominee, RBI nominee. So central government, some 8 to 9 institutional bodies were there. They all nominate 8 members, central government nominees. All put together 40. Within them, one is president, one is vice president. Are you getting it? And these 40 members tenure is 3 years. And this president and vice president tenure is 1 year. Every 1 year they will be rotated. Understood? President will be elected by these 40 people. Vice president will be elected by these 40 people. Generally, current year vice president will become next year president in the IC. I'm telling you. All of you? You all with me? Yeah. So now, okay, we understood council. Now we have something called committees. We have something called committees. There are 4 committees, like standing, non-standing, directorate, and secretary. Like non-standing committee, I'll show you. These are all various committees in the ICA. Accounting Standards Board, Auditing and Assurance Standards Board. Right now we have all engagement and quality control standards, right? Who are issuing all those standards? Auditing and Assurance Standards Board. This is the board which has issued all the 46 standards that are there. Now do not hate them. Okay, so all the standards issued are by Auditing and Assurance Standards Board. Auditing and Assurance Standard Board is nothing but it's a committee of ICA. It's a committee of ICA. Have you heard of this word audit committee in a company? Exactly. What is audit committee in a company? Like see, a company, Reliance you take, there are 14 board of directors. Do you think each and every director look into every FIR of the company? Like Mukesh Ambani will involve in audit works, finance works, business risk management work, sales, marketing, everywhere? No. CSR, corporate governance. Have you heard of CSR committee? Exactly. Important question. Yeah. Okay, fine. So CSR committee, like what are they? CSR committee, audit committee, risk management committee, finance committee, CG committee, corporate governance committee. What are all this? Like all 14 directors will not involve in every affair of the company. Within this 14, some 3 directors, they look into corporate governance. Some 3 directors look into CSR. Some 3 directors look into audit committee. Some 3 directors look into financial affairs. Some 3 directors look into risk management. Like the directors divide duties among themselves in the form of committees. These committees will have expertise. Audit committee is expert in audit and accounts. Finance committee is expert in entire financial affairs, credit risk, all that. CSR committee is expert in where to spend exactly the money. These committees will give suggestions to board as a whole. Suppose if board of directors know if they have to discuss about appointment of auditor, who should be the right person? 3 directors were there, na? Their audit committee, na? They will tell, sir, we 3 directors will, these are the auditors we selected. These people are right for our company. Then board of directors, see the same person is a board of director. The same person is also a member in audit committee. But this member is specialized in audit. Same way, ICAI is also 40 members were there. How do you think all 40 members will look into every issue? So what they did, they formed these 40 members. Some decisions all 40 together they have to take. But before they take decision, within this 40, some experts will be there on everything. For accounts, some experts will be there. For audit, some experts will be there. For tax, some experts will be there. For examination, some experts will be there. These experts will form into subgroups. Those subgroups are called as what? Committees. That's it. Understood? This is exactly resembling, Companies Act. Even in Indian Parliament, we have the same structure. Okay, we'll discuss in government audit. The Parliament committee, their structure, that I will discuss in government audit. Next. So what are they? So standards on auditing, standards on review engagement, standards on assurance engagement, standards on related services. I'll do one thing. It will take little time, I guess. We'll take a break and then continue in the next session. Okay. Yeah.